American whiskey is pretty good.
Yeah,
Yeah.
apparently
Okay.
so.
All right.
Yeah.
Let's go.
So 3, 2, 1. We've already started recording.
That's
Okay.
good.
Hi everyone. Today we are with Mina Saad, the founder of Icon Real Estate.
It's not.
No, it's not Icon Real Estate. Start this thing again.
See? Because for me, it's because
From the book point of view, it's Icon.
Yeah.
From the public point of view, it's Icon.
Hi everyone. Today we are with Mina from Ion Real Estate, the founder, and Mr. Darsh Naidoo, who works closely with Mina as a real estate professional. And the topic of today is interest rates, the hot topic, flavor of the month. Flavor for a while, actually.
It's flavour for the last 4 months, mate.
Correct. So we're going to talk about how the interest rates are affecting the property market at the moment, and touch up on a few things such as the seller side, buyer side, and also some of the things you need to be mindful of to make sure you're paying as little as you possibly can in terms of the interest rates, and managing that loan. So Mina, would you and Darsh like to start us off with tell us how things are going at the market at the moment?
Yeah, sure. I'll tell you. All right. So usually the way that we actually look at how things are going in the market, what we'd usually look at from our perspective, pretty much once a house goes to market, yeah, we need then to go, well, what's the activity on that specific property look like? If there's inquiries, if there's buyers coming through, there's people putting offers in, if there's a hot level of activity on a certain house, that means the house is performing well. Now, that's usually, I guess, in the general scope of things, how we would look at it. Now, how does interest rate play a part in all this? Because a lot of people kind of, not necessarily don't understand, but they don't know how much it impacts that side of it. So usually with every interest rate rise that we're going to see, we're going to, generally speaking, see a reflection on price on that end. So let's say, for example, if what were interest rates were 4 months ago, they were at 0.15% with the Reserve Bank. Now they're sitting at 1.85. This is the fourth consecutive time that we've actually seen an interest rate rise in 4 months straight. This is a rare situation. I think the last time it happened was like 1990 or something. Now, how does it impact the actual property sector though? Pretty easy. Usually when someone is getting hit hard by interest rates, this is from a buyer perspective, what's going to happen is their bank is not going to tell them, hey, by the way, I know you were able to, borrow $900,000 3 months ago or 4 months ago. Unfortunately, now that's not the case. Now it's going to be less. In some cases, this might be 800. In some cases, it might be 850, 750.
Yeah.
So essentially what it does is it eliminates that buyer from that price point, meaning that that pool of buyers at a certain price point kind of decreases. Now, how that reflects into, I guess, the property side of things is pretty straightforward.
It's economics, really, and what we're seeing based on conversations with the various professionals, including mortgage brokers, is that the banks, lenders are downgrading people's capacity to actually borrow, which means they're not able to get as much as they possibly can to get into a house, and therefore the buyers in the market are less, which means there's pressure on houses to sell for less. Dash, can you add to that?
Yeah, look, I think Mina hit it spot on with everything. Like, from the buyer activity point of view, the amount of people that we've had coming through our open for inspection on a weekly basis has definitely decreased. There's no doubt about it.
Yeah. I think if anyone says otherwise, they're either lying and they don't know
exactly
what they're talking about.
Yeah.
Really.
Look, you're going to have those cases on certain properties. It might have that unique home out there.
Yes.
That's the first time it hit the market in 20 years, or that house is going to stand out. That's going to probably attract, 30, 40, 50 buyers.
Yes,
But
it's almost a niche in the market.
Correct, it would make sense.
Yes.
And a lot of the times, those properties that do come to the market are going to be a lot of second home buyers, the ones that live in the area, want to upgrade, get that beautiful house in the area. And that's why you're going to see a high amount of buy activity through those homes.
Yeah.
Definitely, yeah.
It's all performance, man. That's the way we kind of just look at it as an overall. It is all performance based. I guess from a selling perspective and we get asked that question all the time.
Yeah, and I was just about to ask you, what do you recommend for sellers?
Well, I get the number one question we're getting all the time now, when's the best time to sell? My response is always the same.
Yeah.
Yesterday.
Yesterday.
And the second time best time to sell is today. And the third best time to sell is tomorrow.
Yeah.
Now, the reason I say that this is a very time sensitive matter, the way that we're seeing this play out. the trajectory is very, very clear. It's no longer a question of, oh, well, is the pricing of properties going to get impacted? No. The real question now that we are looking at, I guess we're looking for the answer for, is not so much is it going to go down. No, it is more how far and how long.
Correct.
That's really the real questions now.
And ultimately, the market does operate in cycles. So as a seller, you've got to be aware of that cycle, right? And each person needs to look at their own unique situation and find out how quickly they need to sell, if they can hold or if they can't hold. And as a buyer, you need to say, okay, well, am I playing the real estate game for the long term, or am I just looking, it's a bit like the share market. Are you timing the market, or is it timing the market? And property is a long-term game, right?
Well,
it's time in the market.
Yeah. Well, being a first-time buyer, I think, look, you hit that spot on. When's the right time to get in the market? As Mina said yesterday, same thing as a buyer, because you'd rather be in it, and ride the wave rather than missing out on it. Because if you look at buyers from 2 years ago right now, when as COVID, when they first hit, people were like, oh, look, even the media, property prices are going to drop 20, 30%. And what happened was it went the opposite way. So being a first-time buyer back then, if you did purchase literally on that first lockdown, your property's already gone up.
Sometimes hundreds of thousands year in year.
Man,
so why wait?
Ridiculous, amazing.
I remember we made a video about it right when the media started. This is like maybe May 2020.
Yes.
I'll never forget, there was a quick video that we made about it. It was right after all the media started hyping up, oh, the property price is going to go down by 35 and 50% in the next year.
Yeah.
I call bullshit. Because it was bullshit.
Yeah.
It was basically just tactical headline reading.
Yeah, it's clickbait.
Yeah.
Right? It was fear sells. And I was speaking to someone in my network, and he says they did a research as to how much is the right percentage of negativity in the news. And apparently it was 73%. So 73% is the right amount of negativity.
I'll tell you how I actually started. I remember how I started that video. I said, guys, there's bad news. Property market's going to go down by 95% in the next week. Now, I said, if you're going to believe that, you might as well believe the bullshit they're trying to feed you in the media that the property price is going to go down by 40% in the next 6 months.
Yes.
Because it was.
Yeah.
And now, by the way, this was all speculation, but it's educated speculation, right? And now, the trajectory was pretty clear at that point. Yes, there was probably a bit of tightening up. But what ended up happening? We saw it shoot through the moon after.
Yeah.
Some areas went up 20, 30, 40%, 50% in some cases. Not down by 30 or 40.
Yeah.
So, in other words, the media said, go right, everyone. Hey, go here. Next thing you know,
it's the other way around.
It was the left that was the right direction to take.
Yeah. Okay.
So,
all right. So I think another thing we want to speak about is how do people save as much as they possibly can on their loan? And for me as a tax agent and someone who works with brokers and again, various other professionals, the first thing you got to do is reach out to your bank, have that conversation, don't be shy, have that conversation and ask them, am I getting the best rate?
Yeah, and if they don't, walk in there with a sledgehammer. Maybe don't do that.
Yeah, don't do that because you might be potentially locked up for a very long time. I mean, we'll try to come visit, but I can't promise. But ultimately, speak to your bank and speak to a broker too, because mortgage brokers have access to a wide panel of lenders, so they'll be able to look at various products and find out which one is best suited to your needs. All right. And the other thing is, when you have that conversation, you might potentially need to change from one bank to another bank. So to do that, the banks will want to find out what's your ability to service the loan. One of the ways they do that is, guys, have your tax returns up to date. If you're a salaries and wages employee, right? If you are in business, make sure your tax returns are also up to date and your business activity statements are up to date. Financials are up to date. Okay? So that's very, very important. That will allow the bank to assess where you're at and how you're able to service the loan. Do you have any other comments?
Yeah, I got heaps of comments. It just depends on what you want to ask.
What do you want to know? Yeah.
Okay. Any last, maybe a summary?
Man, look, the summary of how this whole thing's playing out is quite simple. Historically and over time, this is what's going to happen, in my opinion. This is an opinion. This is not financial advice.
Yeah. None of this is financial, tax,
all right?
or legal advice.
No.
Right?
Technically, not even real estate advice in a way.
Yeah.
Right? But the way I would see it play out is like what we were saying before. Buyers, there's going to be a lot of buyers are going to be scared to get into the market. There's going to be a lot of buyers going, oh, but we're going to wait it out until the market drops off even more, and then we're going to go buy it. There's only one slight problem with that. You don't know when the bottom of the market is. Correct. Nobody knows when the bottom of the market is. It is a statistical impossibility to be able to figure it out, because the only way you do find out is when it goes back up. That's the only way. So by then, too late. Sorry, you missed the boat. So I've seen this play out so many times over such a long period of time. Yeah, that's pretty much it in a nutshell. In other words, the best way to do this is quite simple. It's, you can't win without playing. If you're playing property on a long term, it's quite simple. Get in, get in, get in.
Yeah.
That's probably the best way I can say this in a nutshell.
Oh man, I agree with Mina. Yeah, if you're a first time buyer out there, or you want to get in the market, just get in.
Yeah.
That's the main thing. No matter what, just get in.
Yeah.
In long term, you will always win.
Well,
it's the short term, yes, you might buy it, it might drop 5-10%, but that's the same as stocks and anything else there. It's all the risk that you do.
Yeah.
But in the long term, you in property, you will definitely make money.
Well, and look, whether it's definite or not, but if we're talking about a historical trajectory,
correct.
Yeah, I would, if I'm basing it on that, of course.
Yeah.
Now, no one knows what's going to happen. It's kind of an impossible thing. But if we're talking historically, yes, it's probably going to bounce back up again at some point in time.
Yeah. And the way you make
the way
you make money is time in the market again, not timing the market.
Yeah.
Right.
Look, and we were talking about
ride the wave.
we're talking about interest rates as well, right? And if we have a look at talking about historical as well, yes, interest rates are rising at the moment, but we need to remember they have been relatively low for a long period of time as well.
Correct.
Okay, and if you compare interest rates now to what it was 15, 20 years ago, it is still low.
Yes.
Okay, so if we have a look at that, it's not like interest rates are going back up to 14, 15, 17% like back in the days what people had to spend in order to buy a house. They're still relatively low at the moment. Yeah. I think spending, like, that's something you can probably talk about, but it's all about your expenses, the cost of living and stuff like that. So sometimes if the interest rates go up by a little bit, it doesn't mean that it's not going to be very affordable. It might be not affordable for certain people out there, but for majority of people out there, they could be able to service a loan as well at this rates.
Yeah, and life is all about priorities at the end of the day.
Correct,
You got to decide what you want to spend your money on, what you want to save for.
Yeah.
And that will allow you to get ahead in the long run.
Yeah.
Now, I think one other thing we wanted to mention is if you're looking to buy a house, make sure you've got pre-approval.
Oh, yes, please.
That's going to help you.
Yeah.
Please do.
Get in there, because a lot of people start to go out and search, but they can't put an offer because they don't have that pre-approval.
It's just that the pre-approval is actually leveraged to when they are buying or they're looking at buying.
Yeah.
Because the way that we do it is, if you got multiple offers on the table,
yes.
right? Let's say you got 2 offers, same number, one with a pre-approval, one without. I'm about 90% sure I know which way the vendor is going to go.
Yeah.
Yeah.
It's always going to be the one with the pre-approval.
Or it'd probably cost you more because you'd have to have an offer that's exceptionally higher than everyone else for the vendor to then consider.
Yeah. And even then, that still
we give
might
you
not.
that 2 weeks to go and apply for your loan.
Yeah.
With the risk of you not getting it and potentially losing the other buyers as well.
And even then, that still might, like, even though you might put a higher price, you still might lose it.
Correct,
because it depends on the owner's situation at that point. Because if they're kind of not in a rush, but if they're motivated, it's fairly likely they're going to want a more solid offer on the table rather than a
more
possible maybe at some point in time it might happen.
Yeah.
Those are probably for more the vendors that they've already purchased or need to settle on the next property.
Yeah.
They need someone who's buying their property who's got a strong application.
And the other thing that you probably want to touch on as well is there are a lot of homeowners out there, and what they're looking at doing, they're looking at selling, but they're also looking at buying at the same time.
Yes.
Now, the one thing I can say to everyone that's looking at doing that, you're essentially unaffected by the marketplace. Because, let's say, for example, if you're looking at selling $1 million property and you're looking at downsizing to $750,000 property, and both these properties drop by $100,000, guess what? The gap's the same. It's not any different.
It's funny you mentioned that because today in the morning I was doing callbacks from all my database, and I spoke to a homeowner in Grand Manis, and he said to me, "Darsh, yes, I want to sell it." Okay, I'm happy because the prices are still relatively high out there. But I want to buy the same property for the price I paid for it 4 years ago. Never going to happen. You know,
Well, it's not never going to happen. I mean,
but
if it did happen, it'd be catastrophic.
Put it this way, then everybody out there will be doing it.
If it happens,
if you can replace your house with the same,
concerning state of events
Yeah.
for
Yeah.
it to happen.
Yeah, there'd have to be blood on the streets on that, that kind of event.
Something quite substantial needs to happen.
Yeah.
So that
Yeah.
okay. So again, just to summarize quickly, if you're looking to sell, right, do it now. Don't wait, because borrowing capacity is being downgraded. Simple economics. Less people are looking to buy, which means prices go down. So do it now.
And for the love of God, go with someone that is experienced. This is not the time to go and test. Well, I'm gonna go and sell with the guy that's been in real estate for 1 year or 2 years. They have not come through a market like that. The unfortunate part is the ability to be able to negotiate with the buyers in this marketplace is very, very different to what it was 12, 18 months ago. Now, because there's a lot of agents, I'm not picking on them, but because there's a lot of agents that have started in that period, all they know is you put a house to market, it sells. But now that the market's actually doing a bit of flipping around, they don't know what running a campaign's like. They don't know what the recipe of having the tough and crucial conversation with the vendor looks like. They don't know how do I get a price adjustment? How do I negotiate with the buyer that's always telling me, oh, well, the market's down, the market's down, the market's down. How do you respond to that?
Yeah.
A lot of the junior, well, I'll call it junior agents, really. They don't have the ability to maneuver around these marketplaces because they haven't been through them. So if you're after a solid result and a solid process, you need to go with someone that's got a greater deal of experience. That's just advice. That's
Can you touch up on what that would involve?
What do you mean?
In terms of the campaign that you would run?
What do you mean, the campaign that we would run? That's a very open-ended question.
It's not so much, I would say, the campaign, but it's like Mina's trying to explain, when you are putting that in situation in front of a buyer who's going to turn around and say, look, they're walking through the door telling you the first thing, the property market dropped 20-30%. What your response is going to be like?
Yes.
And as well as a vendor selling your property in this market, you need to be able to educate them into making the right decisions.
I think that's that word is very, very important.
Yeah, exactly.
It's about educating the seller, educating the buyer
as well.
Yeah.
Right? Letting them know what the state of the market is.
Yeah.
If they're looking to hold, well, this is the trajectory. This is what is most likely to happen. Not guaranteed, but this is what's most likely to happen based on what we've seen previously, right? And so you need to make a judgment call. But at the same time, you've got an understanding of the market and how to actually convey the benefits of the property instead of panicking as professionals and saying, oh, I can't sell this, or I don't know what to do here, so I'm just going to,
Going back to, when's the right time to sell, okay?
Yes.
The next question I think I would always ask 100% of the time, what's the reason you're selling for?
Yes.
You know, as Mina mentioned before, if you are buying and selling in the same market, it's not really going to make so much of a difference.
Yeah.
So you got to have a look at every situation of the reason why that person is selling. And Mina's spot on right with that. It's experience of going through all the markets and when is the right time to sell on your situation.
Yeah.
Right. So if there's investors out there that are not selling their primary resident of home, they're selling their investment properties, you need to judge when the right time is to sell in the market. Now, you're never going to find the top unless it starts going down. So you got to be able to educate them what's been happening in the market for the past 2 to 3 years or 4 years, and let them make a decision whether, look, we'd rather sell it now or we'd rather wait it out longer. And kind of gamble with the idea of maybe it will go higher or maybe it won't or maybe it'll drop. So I would say it's a lot to do with situation based.
This feels like a very...
well, the question he asked was very
Greek.
Which direction do you want to take?
It feels a bit like a Greek or European conversation where you're pretty much about to leave the house, saying we're going to summarize, and then you just
ask me a question.
You stay for another.
It's like, what's the process? What process, man? There's like 100 different things I can cover now.
It's such a wide topic.
Yeah.
Well,
so many things to discuss.
Like if someone asks a question, you need to elaborate. What do you like? what direction do you want me to go into?
Correct. And I think that would need a session on its own.
That's a 2-hour session on it by itself.
So again, just to summarize, sellers and buyers go out, have the conversation with real estate professionals, with your loan professionals, the brokers, with the banks, right? Make sure you've got your pre-approval, very, very important, okay? And
In a nutshell.
timing the market rather than timing the market.
Yeah.
So, once more, thank you very much. I hope you enjoyed this session with Mr. Darsh Naidoo, Mina Saad, and myself, Mina from Pinnacle Accounting and Advisory, and these fellas from Ion Real Estate. Ion Real Estate.
I have to edit that part out.
See ya. Thank you.